So 1031, when you look at it broadly, really applies to any real property held for investment or used in a business. And so sometimes people just kind of think of, well, I got to go from commercial to commercial, not realizing you've got all these other types of things that are considered real property that qualify.
What would you say the number one secret is to understanding some of the issues today with 1031 exchange in today's market?
One that I think is overlooked is just how broad a 1031 exchange is. You're certainly familiar with the Delaware statutory trust and what I call fractional ownership, a growing niche. But one thing that people overlook is you can exchange any type of real property. And that's so broad, right? We have people that do exchanges on air rights, what is known as a transferable development right. So if I'm in New York City and I got the right to add 5 stories to my building, that is literally an air right, and I can exchange out of that into an apartment complex. We do exchanges in many states, particularly the drier western states, on water rights, which are considered real property. We do exchanges on easements of all different types. A conservation easement qualifies. An agricultural easement can qualify, and one that's called a perpetual communications easement, a little bit of a mouthful. Just think of it in English as a cell tower. If you've got a cell tower that you create a perpetual communication easement, you can keep your land and exchange out of that cell tower. If it's on a commercial building, you keep your building and exchange out of the cell tower. We do exchanges into energy. We do exchanges into certain oil, gas, and mineral rights are out of it. So 1031, when you look at it broadly, really applies to any real property held for investment or used in a business. And so sometimes people just kind of think of, well, I got to go from commercial to commercial, not realizing you've got all these other types of things that are considered real property that qualify. And I know you're an expert on Delaware statutory trust, where people either go into that as their entire replacement property, or we see a lot of people that maybe will have a little left over. They do an exchange out of $1 million asset. They've got 200,000 that would be cash boot. They just take that slice and go into a DST, right? So they get a little bit of diversification and they pay 0 in capital gain taxes. They kick the can down the road on that.